Hello guys, I hope you have a great day. I'm going to make a very quick video on two stocks that I'm looking to enter right now. I'm looking to build positions, to start building a position in, and I'll give them to you right from the start. Number one is PayPal, and number two is Dropbox. Both of these stocks are getting beaten down lately. They're getting beaten down. They had huge drops the last couple of days. Dropbox was 10% down on Friday, and PayPal was 1% down on Friday, but PayPal has been on a huge downtrend the last couple of months. The last 2 or 3 months, a lot of time, went all the way from $308 per share to $225. So it's been beaten down. I think it's a great time to start building a position, and I'll tell you why I started doing that right now. Dropbox as well. He had a high of $31, and now it's back down to $28 and $28 pre-market. Let me show you those numbers real quick, and then I'll tell you why. So Dropbox down 10%. Because of the earnings, and PayPal has been down the last couple of months. These are the last 6 months, and you see this big downward pressure. So there are a couple of reasons why I like PayPal and why I choose to invest in a starting position in it. So you see this? That's a very stable revenue movement throughout time. It just goes up. It just goes up. I like how stable this is. The gross profit goes up, and even the operating income goes up a bit throughout time. And I like how stable this is, which means that over time, as time goes by, it will probably keep on going up, despite what happens. Net income, not so stable, because you are investing a lot of money back into the business, and of course, it won't be able always, the net income. But goes up as well, goes up again. Margins that don't matter short term. Operating expenses, of course, they go up with all the business that's happening, but I really liked just this start, the revenue and operating income, which keeps on going up at a very stable rate. And the same is holds true for Dropbox. Dropbox, on the other hand, has a price of $28 right now. Of course, it's more of a growth stock, not as big as built as PayPal. It just has an 8.7 billion market cap. They're also looking to enter more the metaverse in the future. I don't know how they will do that, but they'll probably do it with gaming, with NFTs. I don't know how, or with a cloud-based system. I don't know how they were going to do that, because now they have a vertical business model, but they are mostly just to save files, to have access from them from different PCs, etc. But they talked about entering the metaverse in the future. Now Mark Zuckerberg has turned the focus of all of his company to the metaverse, and that's a good thing if Dropbox decides to focus on the metaverse in the future. But Mark, the same guy, said that it will take probably 5 to 10 years before this becomes bigger. So it's not like this will happen the next year or the next 2 years. So I don't think it will be a problem starting from now for Dropbox. But it will actually be good if they start investing from now in that slowly but surely. And again, Dropbox revenue and gross profit also goes up throughout time. Operating income as well. Net income starts to become more stable right now. I like how stable this is and growing throughout time. I love it actually. Margins, we don't care about margins that much now at this state of the business. Operating expenses, okay, they go up, but it seems like the revenue that they have goes up with a faster rate, so we don't worry about the operating expenses going up. It looks kind of lean. It looks kind of lean for the place that Dropbox is right now, and it's growing like 30% year over year, 20%. The expenditure stood up on Q4 of 2020, but the revenue keeps on growing up 10 to 20%, from my understanding. And that's all for this video. Hope you found really useful my thoughts on those two stocks that I'm looking to buy and enter right now. And I'll see you guys in the next video. Leave me your comments down below and your thoughts, and peace. And one other thing I almost missed about PayPal, its PE almost all the time stays around 50. Of course, it was lower at the start when people didn't value it as much. Then it shot up a bit to 80, to 74, 60, 66, 55, back to 71, and now it's 55. No one knows what will happen in the future. Probably will go back to 48, 50, 55, 60. It will play around there. People really value these business models where the revenues just keep on going up. And I think it has created a stable base of investors that will probably hold the stock long term. Anyway, that's one more reason to invest right now. It has a big dip on the PE ratio as well, and I find that really interesting.